Well, Canada's latest budget added tens of billions to the deficit, or in deficit, as Carney spends to ease Trump's tariff effects. Let's get more on this from Joy Nott, partner of trade and customs at KPMG. Joy, thanks for joining Bryden and us. Bryden and I. I was being too grammatically correct there. Bryden and I. Thank you for joining us. I wanted to get Bryden's name in there. Your thoughts on the budget?
I thought the budget yesterday had a lot of references to trade in it. So just to give you an example, in previous budgets, a normal budget normally contains anywhere from 2 to maybe 5 at the most references to international trade, whether that's funding for a new program or an expansion of an existing program. There's usually 2 to maybe 5 references to trade. In the budget earlier this week, there were over 18 references to trade. So that kind of gives you a sense of how trade focused that this particular budget was. And it was very interesting to see the different aspects of trade that it sort of reached out to, with one thing in common, all about diversifying our exports and growing our exports. That was the common theme.
Joy, I'm wondering if you can highlight what the experience has been like for Canadian companies dealing with these trade issues the last year. I'm sure you've had a lot of dialogue, both with the government, but also individual businesses. And what has that experience been like? And how are different companies that are heavy into exports managing through a situation like this year?
Well, that's a very interesting question, because it depends on, excuse me, what time of since Trump became president in the United States, at what period in time you're talking about. So in the first, I'm going to say 2 months, there was a heavy focus from the time that the U.S. election happened to just before inauguration. People were very focused on exporting as much as they could to the United States before the tariffs hit. So in many cases, a lot of companies that I spoke to shipped as much as 6 to 8 months worth of inventory at that point in time. So here we are all these months later, and tariffs have only been hitting them for maybe a couple of months, which, don't get me wrong, that's still not good. But I mean, it's not like they've been hit this entire time, because they stockpiled inventory. So now what's been happening in that time where they had inventory in the United States and were preparing for that inventory to run down and then have to have inventory move that attracted tariffs, there's a number of different tariff mitigation strategies. You usually can't make the tariffs go away. There are exceptions to that, of course. If your goods qualify for the free trade agreement, they don't attract the IEEPA tariffs, the fentanyl tariffs. But if your goods are like steel and aluminum, lumber, those sorts of things, the free trade agreement does not protect you from those tariffs. So there are tariff mitigation strategies. There's a number of them that we can look at. It all depends on how a company is set up. It all depends on how they're selling to the United States. But I would say probably the most common strategy that was used was transfer pricing. That's when 2 companies on either side of the border are related to each other, and then they use that relationship to legally bring down the price lower than the price might be if a Canadian was selling to an unrelated company in the United States. So that's been a very common strategy that's been used. And now, if I may, now what we're just starting to see from companies is a recognition that the tariffs are here for the long haul. And there's a recognition now that they need to start looking at long-term changes to supply chains, potentially looking at changing places of manufacturing, that kind of stuff. That kind of thinking has only been sort of really percolating in the past couple of months, because I think at the beginning, there was a hope and an expectation that not unlike 2018, 2019, the tariffs would be temporary.
Does it feel like this budget is giving them the tools to make those adjustments?
I think so. So, in all the years that I've been doing international trade, one of the most common themes that I hear from companies when you ask them, why have you not looked at going abroad and looking at markets beyond the United States? Often the kind of feedback that I've received were things like it's too expensive to go into other markets for reasons such as you need to hire lawyers in those markets to look at getting everything from copyrights and patents in those markets. Your product might need to go through different regulatory approvals. You have to do marketing. You have to try and find clients or customers, all that sort of thing. It takes time. It takes money. Translating marketing material, all kinds of stuff. And what we saw in this budget was aid, funding, I should say, specifically aimed at those kinds of activities. And the one thing that sort of stood out to me, where I kind of went like, yay, finally, it's happening, is that what they've introduced through global affairs is something called an export strategic office. Strategic export office in global affairs. And what that office, according to the budget, what I read in the budget, what that office is going to do, it's going to be a Team Canada, all of government type effort to help Canadian companies who are looking to diversify their markets away from the United States to break through the barriers of both the Canadian government, so cut through the red tape of the Canadian government, and also help them to get over things like market access barriers in the foreign country, using, for example, the assistance of the Trade Commissioner Service, boots on the ground in that foreign country, but also on the Canadian side, helping them to get anything that they need to export, including assisting with applying for funding. So that's a big change. And to me, I was very happy to see that, because I think that particular aspect of the budget and opening up that office in global affairs will go a long way to addressing some of the issues that I've heard over the years that companies have when they think about going into new markets.
Okay, Joy, thank you very much for joining us again.
Thank you for having me.
Joy Nott is a partner of Trade and Customs at KPMG.